Well, good morning, everyone. Welcome to our Wednesday morning open house. Bear with me just a moment. I'm going to get you my screen so you can see what's going on. For those of you who are new to our open house room, our public trading room, welcome. My name is Eric Senft. I'm here to show you a little bit about how DTS works and to answer any of your questions. Hopefully the markets will be a little bit more cooperative today, and although yesterday they weren't too bad, but for the early part of, or the latter part of February, early part of March, they've been a little bit on the sluggish side. What you're looking at here is the diversified trading system, and it's diversified because we're looking at the market from different points of view. Here in the top left, we have the Hawk Micro Scalper. This tool has been designed to pick up short-term scalping trades. Here in the top right, we have the Falcon Swing Trader, which, as the name suggests, has been designed to pick up intermediate swing type signals. The bottom left, we have the Eagle Trend Trader, and that one has been designed to pick up trending signals. And the bottom right is the newest addition to the DTS family. This is the Raptor, and the Raptor is sort of a combination, an amalgamation of the other three birds all into one. So it has elements of the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader all comprised into one tool. On this particular monitor, I'm watching the NASDAQ. On my other monitor, I have soybeans and crude oil open, but I would be happy to take a look at any market which is of interest to you. We're seeing a little bit of a decline here off of the open. Let's take a look, see where the market has been in the overnight. Yesterday, nice little rally up, especially in the afternoon. The morning was a little bit choppier. So here was yesterday morning, a little bit of a decline, come back with a full reversal, just like the NASDAQ of late, isn't it? We got some nice signals here. This one here is what we call our macro pullback signal. It occurs when the market pulls back to the macro line. That's this thick line here on the Hawk. And our micro line, that's a thin one, goes out of sync. When that happens and we get a signal generation, which occurs when we get these warning dots and triangle and hash marks, that tends to be a fairly reliable signal, and you can see that one had some nice follow through. All right, so then the session ended. Everything started going sideways. A lot of yellow bars. Yellow bars indicate some choppiness. The London Open, we had a first micro-macro cross signal here. Very reliable signal for the Hawk. Oh, here's another macro pullback signal. And then we're into some more yellow bars and some more choppiness. So right now the NASDAQ looking for a little bit of direction. We're only a few minutes into the trading day. I try not to get too excited right out of the gate. Here's the Falcon. Nice trend change signal here in the overnight. Right here just around the London Open, we had our trend line change color. We get our characteristic down, up, down pattern. And then the signal printing, our warning dot, triangle, and hash marks. And away we go. Nice little swing move there to the downside. We're actually working on another trend change signal here right now with our down, up, down. Ooh, it's running away on me. Come back here. Okay, well, didn't have a chance to get in on that one, but let's see how close we are to our profit objective. Oh, just about. just about to our first profit target. And here was our first micro-macro cross printing again here on the Hawk scalper. So we hit our first target there. We could have a runner in play here now. Okay, so it looks like they're queued up a little bit more to the downside this morning. We'll see if they give us another chance to get in. For those of you interested in the grain markets, here's soybeans. Soybeans tends to be among the more active of the grain markets. Nice trend change signal here right in the wee hours of the morning. Good fall off, and just before the market opened this morning, about an hour before the open, we generated another with trend signal. Bouncing off of some secondary support right now. These lines that you see right here, this is our ultimate support and resistance suite. These are actually, that's actually an add-on indicator that will work on any chart, not just a DTS chart. Okay, last but not least, let's take a look here at crude oil. Here's crude oil on the Eagle. This is our trend trader. We're coming back with a trend signal right now, actually. You can see we're going to be challenging the top end of that trend line. We're generating our warning dot, triangle, and hash mark. Let's see what this one would cost. We're getting a second push on this entry. Can I cover it all the way down there? No, I can't. That's the problem with crude oil, is it's so expensive that it makes it difficult sometimes to cover these ranges effectively. All right, so this market is retreating a little bit, which is fine with me. Okay, so there's, see, when this bar pulls back a little bit like that, that gives me a little bit more confidence with entering the signal. So, but crude oil, a little bit sideways at the moment, so that's not the most attractive looking signal, but still it is shaping up to be a little bit of a buying opportunity. So we'll see how that plays out. Here on crude oil also, this is on our Falcon tool now. This is our swing trader. And we're getting here what's referred to as a late filter entry signal. What happens is your filter goes out of sync, but your trend line does not. Very reliable signal. Let's see if it's the parameters on the Falcon allow me to take a little bit better trade. Yeah, this one actually a little bit better than the Eagle right now, because with the Eagle I'm trying to cover the trade way below this swing low, but with the Falcon I can actually set it up a little bit tighter, take it below this intermediate swing. That's a nice thing about these mean Renko bars, which come with the DTS birds. So we'll toss that order in for a moment and we'll see whether or not they choose to cooperate. David asks, could I see crude oil on the Raptor? Absolutely. Let's throw crude oil in here. Oh, and by the way, folks, if you would like any more information about any of these indicators, I've just sent you a link. You can click on that link. It will take you to the website, and give you all kinds of details about the DTS system, pricing and features and so on. Okay, so here we have crude oil on the Raptor. And with the Raptor, like with the other tools, we tend to look for everything to come into sync. So we would like to see signals come into sync. We would like to see the filter be in sync. We have this trading band, which gives us our directional bias. So here in the overnight, we had a signal generate here a little bit earlier. And this one is actually a signal that we like to look for. This is what we call a double pullback into the hard edge. This is the hard edge here on your band. Whenever we get two pullbacks into the hard edge and the signal emerges from there, so we're getting a buy signal here, a blue bar with a green arrow, and a blue filter. And yes, you can change these bar colors to the more traditional red and green. But you can see we generated a nice little rally out of that. The secondary signal, normally what we like to do is we like to cash in on the first signal coming out of this hard edge. That's going to be your more reliable one. The second signal worked out as well, but you did take a little bit of heat. So it would have depended where your stop was. If you ran an ultra tight stop here, well, you would have been stopped early or perhaps even rolled it up a bit. But if you ran a deeper stop, you would have been able to hold out for that swing, come back into the cloud, come out of the cloud, and there we go. We have another signal printing. So right now it looks like with crude, we're back into this cloud, making another double pullback into the cloud. And if we come out of here now with a buy signal, that will be a buy signal. If we pass through this band, then we are likely to end up printing a sell signal. We do know that when the market encounters the hard edge of this band, we can anticipate some sort of reaction. That just tends to be how crude oil or the Raptor works. Let's see, I got a couple warning dots down here, but it never actually triggered. See, here again is a double pullback into the hard edge. Right. It comes out and generates our signal. The Raptor will not be the fastest tool. If you're looking for fast signals, you'll be looking at something like the Hawk Scalper or the Falcon Swing Trader. The Raptor tends to sacrifice quantity of trades for quality of trades. See, here's another double pullback into the hard edge, and yes, it went well past the hard edge, but the principle remains the same. Here's a double pullback, here we come out, everything is now in sync, our band is in sync, our bar color is in sync, our buy signal is in sync, and of course the first signal, as I mentioned, tends to be the most reliable, so that's what we're looking for, and very nice move higher off of that one. So can't tell which way crude oil is going to move just yet, but we do know it is into the hard edge. So this would be move number 2 into the hard edge. If we come out of here now, then that should give us a buying opportunity. If it continues to drift lower, well, then all bets are off. Let's just shoot a trend line across the bottom here just for kicks. Yeah, see, we might see some trend line reaction here. I've since canceled my other 2 orders. Here I'm going to show you something on the Eagle while we're waiting for that. Here on the Eagle we have what we call the rule of 3. 1, 2, 3 signals against the hard edge of this band. Now you probably notice this band is very similar to the band that you see on the Raptor, and that's because the Raptor has borrowed this band from the Eagle. And the rule of 3 is essentially our counter trend signal. It's telling us that the market is starting to break apart, and that we might see crude oil head lower from here. Now, with the rule of 3, we always want to see a test of the extreme first. This is what we call a test of the extreme. The extreme being this price here. Prices come down, prices come up. They show us a failure. That cues us up for a possibility that this market is going to head lower. So I'm actually going to set that on my other crude oil chart right here. So we would look at selling below here. Ideally, I want to cover above that swing high. That would be an ideal setup. And again, you see how this bar is moving higher? That's good. That's showing me that there's active buying going on at these levels here. So if the sellers push the market lower now, they're pretty much going to force the buyers out. Now, I know there is some support here at 50.60, so maybe I'll enter just a little bit below 50.60. Can I still cover? Yes, I can. All right, so we'll set that aside for the moment. So you see we're still getting trend line support here. Joe's having some trouble loading a template onto a new chart. Usually, a lot of times, Joe, the easiest solution is just to close NinjaTrader and reopen it. A lot of times that will fix whatever's going on. So here's that 50-60 level where we know there's some support sitting. We'll see whether or not they can actually break down below there or not. Oh, you did that. Try loading a different template, Joe, just to make sure that your templates are loading okay. And other than that, I'm going to get you to contact Ben at support@indicatorwarehouse.com. Okay, shoot an email to Ben, and if anybody ever has issues like this, Ben is the fellow you want to talk to. He's a pretty smart cookie, and he can usually help you out with that. Okay, I'm going to put the NQ back up here because I have crude oil on my other monitor. And I'm going to show you here in a second crude oil's first micro-macro cross signal. But before I do that, we've got a signal brewing here in soybeans also. So pretty good start to the day. I was actually going to be a little bit more aggressive off of this morning's open, just because the way the market has been of late, we've seen some decent moves come right out of the open. Okay, so here's soybeans, and soybeans are printing a warning dot. I've got the triangle, but not the hash mark yet. We're actually waiting for this bar to complete before it prints. I can take it right on the low. You're going to notice this little red-blue squiggly line through here. You can also use that as a filter. So you can enter below that line. It's only a couple ticks further. I'm going to try to cover near the hard edge of my eagle band. That's just because I know that this is where the market's going to find some sort of reaction. Now I've turned off my stop strategies for just a moment. But if this trade engages, I will enable the stop strategies and it will automatically manage my trade for me. Those are these blue dots, by the way, that you're seeing all over the place on the chart. That's the trade manager and the stop strategy. We have 16 different stop strategies to choose from, and they will automatically manage your trade for you. They are all fully customizable and tweakable. Oh, Eric, you got to start paying attention. I missed a late filter entry signal here. All right. Well, okay. Okay, Joe, you're still having problems with your template. Okay, I'm not sure what you mean by finding a new template. Joe is asking, the templates I saved in the workspace loads fine, just cannot load any new template. Well, if you, okay, just a quick little aside here. If we're going to our trade manager, and I'm assuming this is what you're talking about, and you need to disable it, of course. You need, here it's enabled. You need to go false, apply, and then you can save your template just by clicking on here and typing in a template name. Just give it a new name. I'm hoping that's what you're referring to. If not, Joe, send me an email and I'll see if I can't work that out for you. And by the way, anyone, if you have questions for me or want to email me just to say hi, my email is eric@supportandresistance.com. All right, well, I'm a little disappointed that I sat out some of this early part of the NQ move because that was a rather substantial decline right out of the gate. First micro macro cross right there. Look at that. That would have worked out beautifully for me. I think I could have at least taken 2 contracts on that. Let's see how that sets up. Oh, it says 6. I would have dialed it down. So, risking 1% of my account, I could have got in with 3. Oh, let's reset my profit objective. Take half on target. First target, I'll make 10 ticks. Let's see how that would have worked. So I would have banked a target there, a contract on target there, and then we would have been stopped on the remaining 2 right there. Well, that would have been a very nice little move. All right. Going a little bit sideways now. Here was a macro pullback signal. It also had some nice follow through. We might be building into a little bit of a consolidation phase here now. See here our hawk getting into yellow bars. Yellow bars show us indecisiveness. They're, by definition, they're very neutral. Way to go, Joe. Joe nailed one on the NASDAQ. Well done. Here our trend line is starting to change color on the Falcon. Our crude oil trade doing fairly well. So now I can, if I enable my stops, see my stop is up here. Now the trade manager will automatically grab my stops and move it down according to the stop strategy I've selected. So I can quite literally ignore this trade now unless I think it needs some further management, or if I choose to hold my stop. And like I said, it's all adjustable. I can even adjust it on the fly, or if I want to go with a different stop strategy, let's say I want to go with parabolics, I can do that too. I can adjust it to parabolics or anything. Like I said, there's 16 different strategies available to you here, so no shortage of stop strategies to choose from. So we'll let that percolate a little bit. Oh, getting a green bar sell signal on our hawk. This is on our hawk scalping tool. This tends to develop toward the end of a trend. You can treat it as a with trend signal or as a counter trend signal. So there would be the with trend signal, or you can even just treat it as an early warning that the trend might be reversing. If I was taking it counter trend, I would probably set it up this way, risk it below the lows, because that's the obvious place to cover this trade from. But if it does turn over, we're very likely to see a first micro-macro cross to the upside. Joe writes, I had an entry on the Pursue but did not submit it. Bummer. It happens. It happens, Joe. The the part that bugs me is I saw it, right when I was getting the room ready. I saw this first micro macro cross setting up, and while I was doing the room introductions, it decided to go like that. So yeah, I was a little bit late on that myself. Well, that's the nice thing about trading, right? There's always a next time. There's always another opportunity. You can see we've got no shortage of opportunities here. The Raptor kind of confirming what we're seeing on the other tools. We're starting to drift into our band and just touching the band a bit, but even so, we might see a double pullback into the hard edge. That could bring us all the way back here to 44.40. Not an unreasonable target. Speaking of first micro-macro cross signals, crude oil also gave us one back here, about the same time that we took our eagle trade, our trend trade. We also had a first micro-macro cross signal, which we know is a very high probability signal, so there was a nice little opportunity for a scalp on crude oil on the recent move lower. Ah, way to go, Jim. Jim's got grabbed 10 ticks on 2 contracts in the NQ. Yeah, off of that green bar sell. Jim pointed this out the other day. The green bar sell signal, when it enters the band and the Raptor actually is printing a buy signal, Jim's been selling it off of the next bar. Well done. Okay, so waiting for our first micro-macro cross here. You can see with the green bar sell, let's see whether or not we got our first profit target on this one. Come on. Yep, hit our high probability profit target, and look at that. The market turns on its heel, start heading the other way. This is what I said. You can also treat these green bar sells as counter trend orders, in which case we would be long, but very often if the market is truly changing direction, we're going to print a first micro-macro cross signal to the upside. Try not to get too aggressive to the upside because the market very much in a downtrend today. Okay, here comes the first micro-macro cross. We're printing the warning dots. And like I said, I don't want to get too excitable about buying something here, but I've got my risk dialed down to 1%. So let's see, what's that going to cost to be wrong? Okay, that's not bad. That's worth a stab. And where did I think the market could go? Up to around 44.40. So we'll see if we can do anything with that. Okay, so now we're back into yellow bars. Yellow bars nix our order, and as soon as we print a yellow bar, we're printing a red bar buy, which is another buy signal. This is actually the inverse of the green bar sell. So we're still printing a red bar buy. Nope, there goes the red bar buy. So this market not interested in moving higher. We'll see if we get a first micro macro cross to the downside now. Okay, we're printing warning dots, but no signal just yet. Remember, we're looking for confluence, right? We want everything to be in sync. These yellow bars tell us that the market is actually range bound. And if you wanted, you could even highlight the range like this. People are always asking, how do you trade choppy markets? Well, personally, I don't think it's wise to trade a choppy market because by definition, there's no follow through. But being able to identify when a market is choppy, when it's time to avoid it, I think that's a pretty big deal too. Okay, our Raptor also flashing us a lot of yellow bars here. Working on that double pullback. Oh yeah, that's how I got 44.40, wasn't it? I was looking at the hard edge here. Oh, way to go, Joe. Knocking it out of the park. Joe said his 6E short just nailed 20 ticks. Well done. Nicely done, Joe. Yeah, I should be following this 6E a little more. In fact, we don't have a trade on at the moment. Why don't we take a look here at the 6E? For those of you who like trading the currencies, the Forex and so on. I tend to prefer the futures over the Forex, mostly because of the spread. I find the Forex spread very annoying. All right, let's take a look here at the Hawk. Yeah, here around the London Open, I know a fellow down in Arizona who loves trading the euro. He stays up all night. But it looks like it would have been worth his while here out of the London Open. A nice first micro-macro cross. Came off of a red bar buy failure, so there's that opportunity for a counter trend. Yeah, the London Open, down she goes. Couple macro pullback signals. He took a little bit of heat, nothing too serious though, followed by a green bar sell, another move lower. Now we're into our session here. So here was a first micro-macro cross. That's on the Hawk. So the euro looking very cooperative at the moment. Let's take a look at the Falcon. Had a corresponding signal here on the Falcon swing trader for that London Open. Little trend change signal going on here with decent follow through. This would be in our session now. So that looked pretty good. Let's see if we got a signal on the Eagle also. The Eagle I might need to fine tune a little bit. I'm not going to do it here, but you notice these white lines, these are our daybreak lines. So unless you're looking to take longer term trade with the eagle, and you can see it's still generating reliable signals. Like we had a nice trend change signal here. This was our rule of 3 signal. Great follow through on that one a few days ago. But if you're looking to trade the trend trader intraday, the 12 tick brick is a little bit large. We would actually have to dial this down to open this up a little bit more, because each of these vertical lines shows us an entire day's worth of trading. So not many opportunities there right now. Let's take a look at the Raptor. And the Raptor 2, you see how these lines are, these day breaks are forming a little bit too close. We might need to adjust the Raptor brick size a little bit for the euro. But here we came into the band, came out of the band, generated a sell signal. When it just touched the band, came out, generated a sell signal. So the Raptor coming through with some nice signals. Here was the trend change signal for the, or the double pullback signal, I should say. So into the hard edge, the double pullback. Here was the signal coming out. The Raptor also caught it. That would have been that one coming in around the London Open. And the nice little move lower there also. The default brick sizes work for 99% of the markets you're looking at. However, sometimes we adjust them a little bit given how it's printing. You know, if those daybreak lines are coming too close. Jim's asking how much is our 20 ticks. The euro trades at 12.50 a tick. All right, here they come again. Looks like they've made up their mind. Oop, Eric. A late filter entry signal right here. Very high probability signal. See the trend line, the filter goes out of sync, the trend line does not. Very reliable signal, and you can see we had a nice little bolt to the downside there. Did we hit our profit objective? Yep, just hit our high probability profit target, and now we're seeing the market turn. It continues to amaze me how often the market will hit our high probability target and then start going the other way. Joe's asking, what brick size would you recommend for the 30-year bond on the Raptor? Well, the 30-year bond is interesting because I think it's the most expensive tick value at $31.25 a tick. I would probably go with the 244. So I would set the, here, let's go to the Raptor. I would try this and you could see how it works. So on the cloud, I would set it at 4. On the filter, I would set it at 4. For the brick size here, the hawk brick, I would set it at 2. And for the data series, I would set it at 4. So 244 would be the brick sizes I would be looking at. come with a first micro macro cross signal. Oh, don't run away on me. Oh, I got the full 2% going here. Let's see if we can't dial that down a little bit and still grab it. There we go. Whew, just in time. Okay, so this is now our first micro macro cross. I'm going to disable my stops for just a moment. See if we can't get below this trading range again. You see what happened is the sellers forced the market down here, and then the buyers jumped all over them, only let them fudge it a little bit. Ideally, the best entry is below this low right here, but we'll see. We'll see whether or not we can't ride this out. Same thing, the best place for my stop is actually above these highs, above the top end of this trading range. Oh, thanks, Jim. Jim says we're hitting the 10 a.m. low right down here around 44.21 half. So that could give us a little bit of static. All right, so we'll put that up on the shelf for the moment. Okay, so we're building into a macro pullback signal also. What I'm doing is I'm trying to keep my stop far enough away. Stop that. Trying to keep my stop far enough away so that I can give the sellers another chance to get into this market. And once I see where the sellers are, well, then I can get a little bit more aggressive with my stop. In fact, I'm going to get ready with the bar high-low, which is our more aggressive stop strategy. Or I might even be able to use the swing high-low. Yeah, we'll go with that. The swing high-low is probably the most fundamentally sound stop strategy. Unfortunately, sometimes, it would leave you with an enormous stop if we were using the swing high-low, on our first micro-macro cross trade here out of the open. Our initial stop would have been up here, and it would not have rolled the stop until down here. And then it would have held the stop, and we would have been stopped out. But like I say, as far as the fundamentals go, it's a very sound stop strategy. Okay, so it looks like the seller's not committed to this move lower. Not yet, anyway. Oh yeah, Jim says everybody, the mid cap, the YM, everybody's below their lows except the except the NQ. Go figure. Isn't that just like the NASDAQ? Oh yeah, here they come. Come on, sellers, where are you? I know you're around here somewhere. See, just going back to our trade here for a second, we've got this sideways range going on. We've broken below, so this is where the buyers are. This is where the buyers are active. This is where the sellers are. The sellers should have put up more of a fight here, but they're not. They're digging in a little bit now, which is good. And then we should see it drift back down here to this bullish trend line, after which, if the buyers fail, well, then we'll probably see a run back toward these lows. However, if the buyers pick it up, well, then I'm probably going to get stopped. But that's why we use the trade manager here, right? I'm only risking 1% of my account. So it's not going to be the end of the world if they tag me on this. And for those of you who are new to the room, you might be quite surprised to see a room moderator actually take responsibility for a losing trade. What? Yes, it's true. The DTS system is very good, but it is not 100%. I'm sorry to disappoint you. But that's why we use tools like the Trade Manager to help protect us so that we don't ever overcapitalize a losing trade. Yeah, a lot of sideways choppiness. Okay. A yellow bar signal, not a signal I would take. This might actually build into a 4-arrow consolidation, which would be a signal I would take. All right, so now we've seen the sellers step up. They've broken this little bullish trend line. We're going to see the buyers try to react to this. There you go. You see them trying to buy it up a little bit. And now this bar that we're working on right now, this is a real tug-of-war bar. Whoever wins this bar is probably going to control the market. You know, you look at a daily chart, I think just about everybody is waiting for a little bit of a reset in the stock indices and the NASDAQ. Yeah, here they come. So you see we have now this higher swing. And they're probably going to push the sellers out of the picture now. Well, you know what? For 10 bucks, I'll hold my stop back. Just to try to give the sellers one more chance. You saw how Trade Manager automatically rolls the stops for you. Joe, yes, thanks. Crude inventory coming up, Joe says. That's right, at the bottom of the hour. A lot of times what I like to do with the inventory reports is I'll go to a tool perhaps like the Falcon, which is our swing trader, and see if there's any obvious swing points. And it looks like we have an obvious swing high here, fairly obvious swing low down here. And what I can do is we have an OCO order feature, so I can actually bracket this area and buy and sell above or below these ranges. Now, when you use the OCO order, you need to remember these orders are live the moment you put them on your chart. And crude inventory reports an insane time to trade. This is sometimes fun to do if you're just doing it in sim, but be aware that when you're doing it with real money, you want to always have a stop in play. Now, the nice thing here about our trade manager is that we will always have a stop in play. And what I should do while we have a minute is I should adjust my stop a little bit. You see, I'm going to explain this to you in a moment, but Trade Manager has a feature where if you enter a trade opposite the stop strategy, it's going to give you a default stop. Now, in this case, it's only 10 ticks, which of course in crude oil is not very much. So I'm going to increase that, say, to 25 ticks. I'm going to go back down here now and turn on my Trade Manager again. And I can redo my OCO order. So the OCO order, I'm going to click on the chart to enter it. And remember, these are live, so I tend to place them away from where I want them to be, and then I'll pull them in. So you see this blue dot down here, this is my stop strategy. Well, if I got filled on the short side and this did not turn over, let's say I make it bigger. All right, so let's say I get filled on the long side now. Well, at any rate, if this was against my entry, so let's say I bought and my stop is up here, Trade Manager would automatically give me a 25 tick stop until I could find a stop strategy to my liking. So the Falcon working on a little bit of a trend change signal to the upside. This is on crude oil, of course. The Hawk on crude oil giving us a macro pullback signal, actually looking a little bit bearish. So again, these tools look at the market from different points of view. These are not simply the same tool redesigned. These look at the market from, a scalping point of view and a swing trading point of view and a trend trading point of view. Okay, we're going to just watch this here for a moment. Inventory should be out in about a second or two. And if we get filled to the short side or long side, you should see the Trade Manager grab the stop and trail the stop. All right, so you see how Trade Manager is automatically trailing our stops? And what's also really interesting is how often the DTS tools actually pick up the signal before the market does. So I'm going to move to parabolics now because I want to protect more of this profit. And, you know, never be afraid to punch out. See, we've got like $600 in open profit there. Show me 600 again, I'll take it. Come on, come on. You can do it. Nope. Okay, so there was a profitable little move. This was on our Falcon. So we punched out of there with a little over $400. And I didn't take the macro pullback signal, but, you know, just once again, these tools, they're very reliable. I see this all the time, that the signal will actually be printing before something like a report release, and the signal had very nice follow through. And our Eagle trade also worked out pretty well for us. We hit our profit target, so we managed to, took a little slippage there, so just shy of $400 in profit. And that was on our trend change signal right here. And our rule of three. Remember, we were looking at the rule of three signal here in the Eagle, where we had the test of the extreme, the three signals printing counter trend, 1, 2, 3, and that tells us that this market might be turning over, which is exactly what happened. So, good morning for us there in crude oil. The NQ still sweating this trade here. The sellers did move it a little bit lower. The buyers did move it a little bit higher. You see all these yellow bars? You see how this filter is breaking up? This tells me that this market has lost all direction, that this is now a range-bound market. We're actually getting a first micro-macro cross signal here to the upside, so I'm not holding out a whole lot of hope for this particular signal. It might still work out, but, you know, I took a flyer, but when you get something like this first micro-macro cross failing, this should not have failed. We should have at least hit our high probability target. No, it turned almost as soon as it brought us in. So we have now a first micro-macro cross to the upside. I would not be surprised if this one also didn't have much follow through to it. Again, mostly because of all these yellow bars and because of this sideways action that we see going on. Joe says crude is bipolar. Yes, sir. I would agree with that. All right, so let's put that away for now. We are getting our double pullback. You see that? It took a little while, but we've gotten our double pullback into the hard edge. Once the market encounters the band like this, we can always be on the lookout for that double pullback. We'll see if it comes out of here now with a sell signal. That would be worth trying. I am amazed at how strong the NQ remains. Yeah, interesting. Jim's making a couple comments here about the Raptor, in particular about these hash marks that are printing. So we're getting a few hash marks. These are buy hash marks, by the way, that he's looking at. Getting quite a few buy signals printing within this range. That's a very good observation. We'll see what kind of follow through that has to it. Oh, way to go. Jim's long 2 from 44.29, so that would be very close here to our first micro macro cross signal. So he looks like he took it just above that high. And he's long 2, took profit on one, runner on the second one. Good job. See, I'm pretty sure we hit our high probability target. Yep, hit our first high probability target there. And just adjusting my risk parameters a little bit. Here on the Falcon, we also had a trend change signal. See, that occurs when your trend line changes color. And in this case, we have the up, down, up pattern. We print our buy signal, which would have come in right there. And we also just hit our first high probability target. This is also one I can dial down a little bit. Whenever the market is, moving a little sideways like this, I'll dial down my risk exposure somewhat. Now that we've reached the top end of the trading range, though, we can usually expect 2 legs in the direction of the breakout. So that's leg number 1 right there. So we'll see a little reaction. We'll see if the buyers can recover, and that will give us leg number 2. So that's what we're looking for now. But you know what? I've got a tiny little trade wrapped up in crude oil. I'm not sure I'm going to do anything silly. The NQ is still, pretty much in a downtrend today, right? Big move lower. I don't want to become too aggressive on the buy side. Ooh, the trade forecaster says that currently we're in scalp mode, but thank goodness for only about another 4 minutes. After that, we're going to be moving into trend mode. This trade forecaster, by the way, is a tool that you can use on any chart. It is also non-specific. So you can, if that's a tool that you can use regardless of your chart style. Same thing with the ultimate support and resistance suite. That's these lines that you see here. They're a grouping of 21 support and resistance lines. The gold line is your median line, your Blue lines above and below are your primary resistance and primary support, and then you have secondary support and resistance levels. And that is something that will, again, work on all charts, not just DTS charts. And we also have this handy-dandy tool over here called the Day Ranger, which gives you the daily range relative to the average range. So you can see that at the moment we're 147 ticks. Yesterday was 178 ticks. The 30-day average 173. So there might not be too much of a move left here in the NQ. It looks like we've pretty much run our course for the most part. Certainly above the 5 and 10-day averages. So the daily range does seem to be expanding somewhat, which is good. That tells us that the market is getting a little bit more active. Which is nice to see. Okay, into the hard edge now of the trading band. We can normally anticipate some sort of reaction from here. All right, let's see here. Jim is giving us some pretty cool information. He says 5,000 contracts sold at the 4433 area. 4433 area. Oh, up here at the highs. There were 5 green hash mark signals that failed. Odds are the 6th wouldn't. Let's take a look. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, good call, Jim. Yeah, nice little spike higher there. Well done. Well, you can see what the trend line traders are looking at, right? I shot this trend line across the top here. The trend traders could be looking for a pullback all the way back here to 44.46, 44.47. That would pretty much bring us back to where the day started, right? That's more or less where we opened. It would be a huge recovery. In case any of you are wondering how we gauge which trades we want to take, because you're probably looking at this and saying, well, wait a minute, there's arrows all over the place here. How come he's not taking, this arrow here? We have different signals that we consider higher probability. Yeah, see you, Jim. Well done. Jim says close the last one out at 44.35 half. Well done. Nice move. This is our what we call our cheat sheet. This is for the hawk. And you can see we've highlighted 5 of the most probable signals. So you'll be looking for things like the first micro-macro cross, the macro pullback, 4 arrow consolidations, post 4 arrow consolidation, which this one coincidentally is also a macro pullback, and then your red bar buy or green bar sell. These are going to be your most probable, highest probability setups. So even though this signal here did have some follow through, it was probably only a few ticks away from becoming a macro pullback. I was waiting for it to become a macro pullback. But you can see here our red bar buy, first micro macro cross, the first micro macro cross being the higher probability signal in that grouping. Well, they're taking a little bit of a breather now. Crude oil coming back with yet another trend signal. Now, the trade forecaster is saying we're in scalp mode for about another half hour, after which time we're going to enter trend mode. I'm not going to take this signal. I'm already good with what we have here, but let's just see. This one is in sync with our filter, gives us an opportunity to cover it above there. Let me adjust the profit objective a little bit, go with our higher probability target. And let's just see how that works out. You see, in a market like crude oil, you need to gauge as well the daily range. So let me bring the day ranger over here. Because crude oil typically will make sustained moves of about 100 ticks, 90 to 100 ticks. So if we see a move like that, then the range is probably done. So crude oil opened here at 6 a.m. my time, that's Pacific. So it looked like it moved from around, well, let's say from 51 down to, well, certainly down to 50, no problem. Yeah, so from 51 to 50, there's the 1,000 or 100 ticks. And you can see our day ranger reporting 150 ticks. The average, 10-day average, 175. So we're almost done for crude. Let's see though, let's go back to the action here on the trade manager. Oh, look at that. Just kissing our high probability profit target. Just nailed it right on the number. There we go. So it would have worked out. Would have hit our high probability target there. Nice thing about this signal is it was in sync. Let's see if this signal also hit the high probability target before turning, or if we had to take a little heat. Oh, look at that. Just came up a tick short. Take a little heat and then get our target. Yeah, so crude oil, very aggressive to the downside today. Of course, that means that prices at the pumps will be coming down this week. Oh, I know. Sorry, I just couldn't resist. All right, so here we are. We've drifted back into this trading range. So you see we've tested it to the top, no follow through, tested it to the bottom, no follow through. Yeah, the NASDAQ might be done. Well, we'll hang on for a few more minutes, see if anything shakes loose. If you have any questions, please type away. Yeah, here's the NQ working on a trend change signal now. See our trend line's changing color. We've got the down portion. Here's the up portion. This is showing us the buyers trying to fight the market back. And we'll see whether the sellers can come back here now and force this lower. Okay, we've actually got a raptor signal here. So we've got the double pullback into the hard edge. We're anticipating some sort of reaction here. With the Raptor, I'm using the Trailblazer, which is like the Trade Manager, except it gives us the opportunity to do a one-click entry. So with a single click, I can place the entry order, and if we get filled here, it will automatically engage a stop for me wherever my stop strategy is set. So let's say I'm going to go with the swing high low. It will automatically place a stop for me up there. And like the other tools, I can adjust my stops on the fly, however I see fit. I'm going to get the bar high-low ready because I think I'm going to want to be more aggressive on this one. Haven't had a chance to show you the break-even button yet. So here's the Raptor, or the NQ, I should say, a little bit wishy-washy. Yellow bars back inside this trading range, so I'm not real thrilled about this particular trade. Too many yellow bars here for me. But it is a Raptor signal all the same, so we'll see. We'll see how it plays out. Mike is asking, which one is best for trend trading? Well, the Eagle Trend Trader is designed to pick up trending signals. Remember, though, that when you're only looking at the market from one point of view, you're only going to get one type of signal. So when the market is not trending, as it was a few days ago, like this, you're not going to get any signals, right? You're not going to get much that's tradable. So that's why we have three different tools. It's like my grandfather used to say, if the only tool you have is a hammer, you tend to see everything as a nail. Well, this is why, if you've been trading for any time at all, I don't care what you're using for an entry signal, but your signal works sometimes. It'll work for a few days and then it'll stop working, and you'll sit there scratching your head saying, why did it work yesterday and it's not working today? What am I doing wrong? And what do most people end up doing? Well, most people end up throwing more indicators on their charts or looking at different signal generators. They say, oh, maybe my friend uses Bollinger Bands. Maybe I should use Bollinger Bands. Or somebody told me RSI is really good, or CCI. And you start playing with all these different indicators, and before you know it, your chart ends up looking something like this one here, where you get so much stuff on your chart that you can't make heads nor tails out of what's going on. And I actually dealt with a person that this was their chart, and I tried to get them to show me what a buy signal looked like, and they couldn't do it. And I tried to get them to show me what a sell signal looked like, and they couldn't do it because they had too much stuff on their chart. So signal generation is only part of the equation. Okay, so the market is moving away from us. I'll cancel that order. But like I said, that's why we have three different tools, so that when the market is not in a trending mode, you can still capitalize on scalp signals. You can still capitalize on swing signals. And when it is in a trending mode, well, then you'll get the trend signals also. But to answer your question, the Eagle Trend Trader is the one that has been designed specifically to pick up on trending signals. But that's a good question. Thanks for asking it, Mike. And of course, you guys can find out more information about all these tools at the website, and I'll shoot you that link again just so you have it. So we're working on a possible, speaking of trends, we're working on a possible rule of three signal here in the NASDAQ. See, we've got 1, 2, 3 signals against the hard edge. And now we're looking at a possible test of the extreme. See if we get a second push on this entry. And I think I'm going to dial down the risk. Remember, your triangle or your hash mark is always just a suggested entry. In this case, I may choose to enter above the swing high unless this bar trades a little bit lower and really shows me that it would have some real buyer participation to it. It's what we call a second push entry. Oh, here comes crude oil yet again. Now the signal just tripped, and the crude oil hawk is starting to print a lot more yellow bars also. And notice this is our Falcon. This is our swing trader. Notice our trend line is starting to get a little bit wavy here. And notice our filter is starting to break up a little bit also. But the signal I want to point out to you is this late filter entry signal. Right? The same signal that we saw back here tends to be a very reliable signal. Now, the whole market is starting to flatten out a little bit. You know how we normally draw trend lines across the top? Well, I often encourage people to draw trend lines across the bottom. Connect the dots of your swing lows, and you'll see right away that the market is starting to flatten out a little bit. Right? So we're losing a little bit of our downward momentum. Certainly if it swings here, we could say that the downside is done for the moment. But it hasn't swung just yet, but it's something to keep a lookout for. All right, you guys, we're going to button up the room here in a few minutes. If you have any questions, please type away. If you are trading this afternoon, well, like I said, I think crude oil is done. The NASDAQ seems bound and bent that it's going to try to retrace, so I've got a target here around the 44-46 area. And it looks like our band on our Eagle Trend Trader may just about be ready to turn over. I'm going to try to hold my stop back just below the swing low a little bit longer. If still kind of nursing the soybean trade to the downside, soybeans haven't really done a whole lot this morning. They're relatively flat, still kind of hovering near our entry, but maybe that will move into something also. Oh, and here comes crude oil again, trying to knock it down lower still. All right, you guys, thank you for your attendance and your participation. I hope that you enjoyed yourselves at least. You DTS owners, I will see